Hello, everyone. I hope all of you are doing well. This is your Nifty guy. Uh, at the start, I would just like to request everyone to please watch the videos as much as you can in detail and pay close attention because what I'm essentially doing is not giving you a trade for the next day, but how I read the price, which has been working very, very well for me for so many years. And that is why I decided to put up this uh, channel on YouTube so that uh, my way of reading the price, which is a very, very simple way, I believe anyone can do it. If you just give it some time, uh, just have to change your perspective of how you look at the prices and how to build a story around the price action happening in the live market so that you can take informed decisions. So for today, like I'll just give you example of what happened in the live market versus what we had planned. Why I always use the word planned is because we don't predict what's going to happen. We plan that if this is going to happen, this is what we are going to do, right? So let's just start going. So we had planned to long the markets above yesterday's high with a pullback. The markets opened with a gap up, came down. Now, pay close attention. In case after this particular red candle or even this red candle, if this high would have crossed, we would have taken a long position because we always take a long position or a short position of basically a breakout or a breakdown with a pullback. So this would have been a good pullback, and any price action crossing this particular high would have initiated a long position for us. But that did not happen. Number one thing that it tells us, even after opening gap up, market is feeling weak right now. So the very next candle, it came down below our shorting area. Now, the same rules apply to shorts as well. We will plan a short below this particular trend line was the plan with the pullback. It came here, gave us a nice good pullback. The moment it crossed this particular low, I shorted the market. Now, initially, I was almost cost to cost versus a little bit in uh, loss. My position was showing as loss, but I did not square it off. The reason being the concept of SL, on which I will make a video very soon of how to put the SLs in right places and how not just the market manipulation take away your SL and then eventually the trade goes in your direction. So in case if you would have shorted the markets over here in this particular candle in a running candle and market has come over here, why you should not have exited is because the right place of putting the SL would have been above this particular swing high, and I was waiting for either that to trigger or market to give me my move. So if we just look at this particular short position tool as well, we entered over here. The SL was right above here, and the market gave us a around one is to 1.5 hour trade. I usually prefer 1:2 plus trades, but this is also a good trade. Uh, so this was where I entered and I exited here. Now, I have always spoken about in my videos about breakout and breakdown trading. Now, the second setup that I use is of reversals. Again, something which is a continuation is usually breakout or breakdown trading, and reversal is something in case the market is going down and if it has to go up, how do you identify and become a part of that trade? So for the market to reverse, I always follow a W pattern or a double bottom, as many would like to call it. So even though the market was falling in one way, I would not long the market in this particular rally. I would wait for it to come down, form a higher low, and then once this high is crossed, this is where I enter the longs. Now, to put things into a clearer perspective, if you put up the charts of in the money call and in the money put options simultaneously on the charts and you correspond them with the spot chart, it becomes much more evident that there's demand coming up in the call options and you can obviously above this particular swing high in the call options is where you should enter. So this was my second trade of the day where I entered over here. I exited somewhere around this place with a good good profit. Now, post this, I did not trade. I got tied up with something and I did not trade this particular move, which could have again been traded above this pullback. So, this was a breakout. Again, the same concepts being used again and again. This was the base which had formed a drop, a base, a rally. This was the base, this was the breakout of this particular zone, and this was the pullback. So once again, once the market crossed this high, long could have been initiated. So I did not participate in that. Now, if we are to plan for tomorrow, let's just remove this. So I'll just remove all the drawings. So if we see market is actually now again gone sideways. So it is broadly in this range. In this box, the market is moving one day up, one day down. Again, there's no momentum in a clear defined range. So this is the range in which the market is moving. Now, if we look closely, usually what happens is market moves in a range and then it gives us a momentum on each side. What I also see is we can draw a I would rather like to take it as a range-based triangle only of the consolidation in this range. Yeah. So for tomorrow, the best case scenario would be market opens flat to slightly gap up, and then it continues to give us this momentum. Now, this would again not be a very good trade because we would eventually want the market to come out of this particular range. Now, today we had some important numbers as well. Let me just have a quick look. So, yeah, so February CPI inflation at 3.61 versus 4.31% MOM, which is good. So, this is a positive piece of news which might give us a push towards the upper side. Now, similarly, on the lower side, if the market opens flat or negative, or eventually comes down around these levels, we can also plan a short trade around the breakdown of these particular levels. So we'll keep the plan again very, very simple, like we always do. Please, please, please make a plan, stick to the plan, trade that plan. But do not be biased that the market will go up, market will go down. Be prepared for anything because the number one rule of stock market is anything can happen and nobody knows well in advance that what is going to happen. What we can do is we can play our best moves, keeping our risk in control, and yeah, that is what is in our hands. So I hope my videos are helping you guys. So like the video if you like the content that I'm posting, subscribe to the channel, and also put down anything that you might have in the comment section. I will reply to those as well. And I'll see you guys again tomorrow with another detailed analysis of Nifty 50. That's it from your Nifty guy. This is me signing off. Cheers. Have a good day. Thank you so much, guys.